Welcome to this Xoogler community meetup around personal finance. We're now doing this as a weekly series due to due to demand and interest. I'm so glad to have Kushagra to actually conduct and moderate this interview with Ali. He's been an amazing founder, friend, one of our friends from Andreessen Horowitz since he actually introduced us, and we've been partnering up on different activities and programs, and today is the launch of one of his new products.
Thank you for joining us this evening. Very excited to talk about personal finance with Ali, particularly because this has been a core passion of mine. Like when I first landed in US in 2011, as an immigrant, even though you have some savings in your home country, you basically come with nothing. So without further ado, Ali, I'd love to leverage this opportunity to learn about your journey as a founder, talk to us about personal finance, and explore Sandhill market as how you started offering secondaries, pre IPO startups and companies to make that accessible to everyone. Let's start with Ali.
Yeah, my quick background: I grew up outside the U.S. Till high school, came here for college, went to Williams, dropped out, moved to California, did my first startup. Went through many pivots. Investing is a combination of time and money. You need both. Did that. I've been doing that since sort of 2018, 2019. And recently, a new startup, for about 2 years in, demo day product called Stonks, and then evolved into Sandhill, which is sort of a Robin Hood for private markets.
Tell us, take us back and tell us about what were some of the first few investments that you made, or maybe before you made the investment, you need to save money or earn money to get there. Like, what was that journey like, and what was your first investment?
I grew up with sort of that basic immigrant mindset of like save money, and really, liquidity-wise, it was just my exits where I made some money and sort of got into investing. But to be lucky, I think you do have to have, chips on the table, right, for luck to happen. So a couple of stories. I think I've done about 75 deals now. And late stage, perhaps my favorite one is Airbnb. So I invested into Airbnb pre-IPO, and that's where sort of a little bit of the Sandhill thing comes from. Is it wasn't the highest multiple return, but I put a significant amount of money into it, like 7 figures, and it ended up 3xing in 2 years. So from like a total return perspective, that was pretty significant as a single investment, as a late stage, because the time to liquidity is much shorter on these late stage deals, right? So there's AngelList, there's Pixart, there's Jar, which we talked about. They're really showing promising signs, but we're really just gonna have to wait a few more years to see. So the reason to think about startups or private markets in the first place is companies are staying private longer and longer, right? So a lot of the value creation that used to happen in public markets is now happening in private. So on average, they're taking about 15 years now, right? And Stripe is valued at about 50 billion. So I think regulations have made it much more expensive to be a public company. The Sarbanes-Oxley, Dodd-Frank, all of these things that happened in response to like the financial crisis or the dot-com bust, sort of a consequence of that is it becomes much more. So if you talk to a public company CFO, they'll typically tell you their budget of being a public company, even as a small cap or a mid cap, is about 30 million a year. So you can raise a lot of money in the private markets. Well, if you can raise 5 billion or 10 billion in the private markets with no cost or very little compliance, right? Why would you hire 100 people, pay 30 million a year at least, if you can raise the same money for way easier and lower cost, lower compliance in the private? So that's why they're staying, right? They can't stay private forever. And as an employee, like, most of your net worth is tied up in the equity of like one of these companies, right, that you're working in. And you want liquidity, like eventually life happens, life doesn't wait. How am I going to convert my imaginary paper wealth to real money, right? That's the disconnect. And that's why I think, that's why like this whole private markets thing exists.
I think you gave a very good synopsis of the megatrends and why private market exists.
And that's where secondary comes in. So secondaries are you're buying either from employees or investors, early investors who are already on the cap table who want to take a little bit of their position and de-risk, bite-sized chunks, put them into an SPV and let accredited investors, QPs, sort of buy into these SPVs. Doing that, you bring the minimum, depending on the deal, down to like as little as $5,000. Because multiple people can be in an SPV. Because now, like with a 5K check, people can kind of access names like Stripe and SpaceX and Anduril and Epic pre-IPO. It just wasn't possible, right? Like, so small check sizes, you focus on blue chip names. And there's over 500 unicorns. And we're really only focused on the top 20, give or take. The names that have the most demand, have built the best businesses, sort of category leading businesses that I would put my own money in.
How do you underwrite it to justify that's a sound investment? And what do you do as Sandhill to kind of like surface that data to investors?
Publish research and reports on individual companies, including things like share prices. There are third-party data providers now who triage, like you take an individual stock like Stripe or Databricks, and they're gonna like collect all executed transactions in that name over the last 3 months, and they'll give you like an average price and price history, right? And compare that to like an actual trading price, like what are people paying for this today, or let them pick their own deals. But we do try to get that information. Yeah, great question. I mean, typically with these things, it's like 2 to 4 years, right? So on one side, you have the public markets, which are liquid 24/7. And then on the other hand, you have sort of the other extreme is early stage, like Databricks could say, well, let's go another 2 years in the private markets.
Yeah.
SpaceX has gone more than 20 years, right, as a private entity. Instacart and ARM and Klaviyo are going public now. Yeah. And the IPO window hopefully is opening up again. A lot of companies will delay going public because they think they get a better price in the private versus public markets. You have up to 99 buyers going into an SPV, buying that set of shares. And the market then figures out like what is the right number.
Yeah.
Right? You have all the information, you have all of their last rounds, you have data on like what the market's trading at. What we want to enable, and this is coming next year, is create a marketplace where people who buy in through us, right, for the first time, can then turn around and sell their positions after a year. So the hope is that there will at least be an option of liquidity.
So thank you first of all for walking us through that. Thank you for that. I do have a few more questions for Ali, but we'll be very happy to take questions from anyone who wants to raise their hand. Can you walk us through one or two deals that you personally invested in? You talked about Airbnb, maybe the background story on how you found that and how did you ultimately end up having the conviction to invest a large chunk of capital?
I just liked it. So I kind of like investing in products that I know or use personally. It's sort of a filter. And so Airbnb was sort of planning to go public, and I found an allocation through a platform similar to ours, other competitors, I guess, called Forge. And Forge is now a publicly listed company as well. So some of the other deals like I'm excited about I've done personally are Mercury, the bank, right? So purchased a secondary position there because we're customers of Mercury. All my friends are customers of Mercury. The UX and the experience is like light years ahead of any other bank I've seen. I think obviously like some of the blue chips like SpaceX and Stripe are exciting. As long as you get it at a fair price, like those are fundamentally great companies. But that's what makes it a good time to invest, and I think these vintages will be good. Certainly better than the last sort of 3 years where there was a lot of froth in the market, a lot of valuations, and they've come down dramatically. The biggest question is price.
So my curiosity is about this whole SPAC phenomenon, which seems to be dead now, but just get your perspective on whether it's going to rise from the ashes, or is that pretty much dead now? And oh, by the way, I worked at Stripe for 18 months. So every time you mention Stripe, it tears at my heart a little bit.
SPACs were sort of an interesting shortcut to kind of solve all of the issues where people weren't going public. What ended up happening was adverse selection. And so a lot of them have done poorly. And so I don't expect it to come back in the near future. Like it was trying to solve a problem of like the bar was too high for companies to go public, and this was like a way to circumvent it. But just because of the performance, I think a lot of the best names in private are probably not going to do that.
The thing I really admire about you is this ability to stay calm. And I think even though you say that you're not a good investor, that's one of the most important traits. Can you start walking through like maybe your first few startup where you pivoted multiple times, and how do you spot these trends?
It will take a few years to find out if I'm really good at it, because venture investing just takes so long. Largest LinkedIn developer on the LinkedIn platform at one point, couple million revenue before LinkedIn shut the platform down. And the first 4.5 years were just spent in purgatory, wandering, right? From one thing to the next, you need to listen to your heart. The best ideas are ideas that even if you forget about them, they come back, tug at your heartstrings. That was the case with esports, right? But it was exciting, you loved it, there's a lot of passion and there as a fan and as a gamer. So I got out of the space, even though my heart was like, this is exciting, this is like a new category, and this is 2013, right? And like all of these big franchises, like Cloud9 started the same year. I know Jack, we were in the same season of LCS together. Cloud9 finished first, Vulcan finished second, right? So he kept at it, and those teams like 12 months later or 24 months later were worth, like a top 3 team was like worth 200 million a year later or 2 years later. Anyway, we went through pivots. I think not giving up is like a big part of it. So, and we got up to $1 million in revenue really quickly. Raised a Series A with Sequoia, leading, right? Raised 16 million. And so 6 months later, like revenue goes from $1 million to zero. Twitch was blowing up, and we ended up building a significant business in that space, doing content creator tools for Twitch streamers and YouTube live streamers, which Logitech eventually bought.
For those of you who are not gamers, like Immortals, TSM, Cloud9 are basically Golden State Warriors, Los Angeles Lakers of gaming.
Kush and Ali, I just had a quick question about, I'm looking at the app and it looks amazing. It has all the stocks there in the private portfolio. And I was curious, because, and sorry if you answered this, when, as an investor, if I invest, do I choose a stock or a group of stocks, or their portfolios already put together that I'm buying into a portfolio of all the equities that are already kind of pre-set up?
You choose an individual stock or company. So yeah, it is very much like Robinhood, where like you pick your own stocks and build your own portfolio. We do recommend people to still diversify and build a portfolio, several deals rather than one.
I will mention I worked at Databricks for about 3.5 years, so I'm glad you're talking about Databricks, because when I started at Databricks, nobody heard of Databricks. Now I think they're in the news, all the time.
You still have your shares?
I do.
If anyone wants to sell their position, feel free to reach out. Ali at Sandhill Markets.
I'll just start with the first couple. So in terms of how you first got into angel investing, I know you're a serial entrepreneur.
I think it's much easier now to sort of learn and get exposure in ways that just weren't possible 5 or 10 years ago. Join the Xoogler syndicate. So join like 5 or 10 of them, and they'll send you deal flow, and you will develop a sense of like, okay, like what kind of deals are there, what's baseline, and what is good versus bad, and what prices should I be paying. And you can do all this without writing a single check, right? Second question, how do we structure these deals? Do we get company approvals? What do they look like? Structure is usually an SPV, right? A special purpose vehicle. It's you own a piece of the SPV, which owns a certain amount of shares of any one of these companies, right? So say an SPV owns 10,000 shares of Antural or Databricks or Epic Games, and you buy 1% of this SPV, that gives you exposure to 100 shares.
Awesome, super helpful.
Discussions based on personal finance, but from your founder experience, I guess, what was it like having to stay motivated and kind of raise money through all these pivots you went through, convince like investors, employees, things like that, that like the new direction that you're taking is the right one for the company?
Very tough because, you know, you've like, first you've sold yourself on like a direction, a vision, idea. That's why they joined the company. And then when things change, like a lot of people like can't change. And you know, I think some people just could take like, you know, so it takes people do have to develop a thick skin and have a lot of grit. Like I think personally as founders, like, you know, having a co-founder makes a huge difference, right? Doing it alone is much harder. Having a co-founder who can be a good emotional partner, having a spouse or a life partner who can also be supportive during this period, you know, meditate, exercise, take long walks.
And first of all, Ali, you are not only an incredible entrepreneur and an incredible supporter, most importantly, you're one of the nicest people I know. So thank you again for coming today. Hopefully this was helpful to you as well. And we'll capture some feedback and share the links with Xoogler and hope to see you soon again.